I think there's only three things that are relevant right now. Right? And here are the three things. The halving is coming with 100% certainty. And as far as I can see, most of the selling of Bitcoin in the market is the Bitcoin miners that have to sell in order to pay their electricity bills and pay their debt expenses and their operating expenses. So that amount of selling pressure is going to be cut in half in a few months. So we know that's coming. And then we know there's a spot Bitcoin ETF coming. And when that comes, we plug into Wall Street and the entire banking system. And then finally, we know that fair value accounting is coming. And when that happens, the objective will go away. And now you're going to introduce this as a conversation into hundreds of boardrooms. They will not move in a week. They move quarterly, but over the course of 12 quarters, you'll start to see company after company looking at this, and you'll start to see a reallocation of assets. Right? At the end of the day, corporations only hold two assets. They hold cash and they hold bonds. And so if Bitcoin is available as an asset, pari passu to a bond, then you'll see a reallocation from bonds to Bitcoin. And then in the institutional investor side, you've got all these people holding real estate, holding commodities, holding gold, holding ETFs and S&P indexes and the like. And if they start to reallocate, and they will, 1%, then 2%, then 5%, then you're going to have something that's never happened in the history of the world, which is you've got an ETF on a commodity that is scarce. Every other ETF in the world is on an asset that is not scarce. It's inflationary. You can make more buildings, you can make more real estate, you can make more gold, you can make more commodities, you can make $100 billion worth of any of those things. The underlying producers produce more of the asset to deflate or to depreciate the price. With Bitcoin, when $100 billion flows into the Bitcoin spot ETF, there won't be any ability for any producer to produce any more Bitcoin. And so you can't really compare it to the spot ETF of gold, because gold is an inflationary asset, and you can't compare it to ETFs on real estate or on bonds or on equity. You really have to say, this is the first time we ever plugged Wall Street into an asset that you cannot produce any more of. And so nobody knows what'll happen, except that if by being an early adopter is you get in before it 10x's. Like what'll happen is at some point Bitcoin will be 250,000 and it'll be really easy to buy, and it'll be not scary, and it'll be easy to borrow against for it. And if you went to the trouble to get the crypto exchange account and to work through all those other things, you got to buy it for 10,000 or 5,000 or 15 or 20 or 30,000. Those will all look good. So I think that it's a really big breakthrough. I mean, I got a lot to say about the FASB thing too, but the point of the spot ETF is that's legitimizing for the asset class. Yes, A, that's the first check. But B, that's plugging the asset into the Wall Street systems. That means that all of these hedge fund guys can buy $100 million of it today, no questions asked. They can just go and punch the button and buy it. I think that the spot Bitcoin ETF is a monstrous offering capability that will have an impact first. That'll have an early impact because into the entire conventional Wall Street banking system. What it means is people with trillions of dollars of assets in 10 minutes can buy $10 million of Bitcoin, and they can do it no money down. So I could literally buy a $10 million house in 60 seconds with no cash. Right? That's what happens when you get to an ETF. And so that will plug every major bank, every investment bank, all the money managers, all of the conventional Wall Street players into the asset class immediately. Let's say you're a hedge fund and you've got $1 billion under management. You've got an account with a big wirehouse like a JP Morgan or Morgan Stanley or Goldman Sachs. And you've currently got it invested in Apple or Google or Facebook or other securities or ETFs that trade on those systems. If you wanted to buy $10 million of Apple stock, you could pick up the phone and say, give me 10 million of Apple, put the phone down. And if you don't have the cash in your account, your banker will forward you the cash at SOFR plus 50 basis points. So you would pay 5% interest, and they would just go ahead and buy the $10 million of Apple stock. And then if you're short the cash, you're going to owe 5% interest on it over the course of the next year. But it's basically completely financed. Now, if you wanted to buy $10 million of an ETF like Bitcoin, and it's a spot ETF, you could do the same thing. You could say, buy me $10 million of Bitcoin ETF. They would front you the money, and you've got it in your account by the end of the day. Now, if you want to buy $10 million worth of Bitcoin, the asset, and you're that hedge fund, here's what happens today without the spot ETF. You have to go to your boss and say, I want to set up a new brokerage relationship with Coinbase. Then you have to get approval. Then you have to go to Coinbase. Then you have to get KYC'd. You have to wait 12 weeks. After the 12 weeks, if you've got it set up, then you've got to go to your board and you've got to change your trading mandate and get the permission to buy this. Then you've got to assign 3 people in finance to do the. Then you're got to establish a trading plan. And after you've done that, that takes like a year of bureaucratic moves. By the way, and they're going to say, no, wait a minute, we're going to establish, you have to modify the compensation system, the compliance system, the custody system.
I mean, I get it.
Okay, and they're going to say, why would you want to do this for 1% of your portfolio? And so let's say you did do it. If you took the year and if they agreed to rebuild all of their systems and rewire them so you could buy this Bitcoin, then you have to go back to your boss and say, oh, I need 10 million in cash. Because Coinbase can't advance you the money. So then after you go and you buy the Bitcoin, the 10 million of Bitcoin, then on the rest of your portfolio, the conventional Wall Street ETFs and stocks, you can borrow against them up to 50%. You can even, like against Apple stock, you could borrow 80% loan to value for nothing.